Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Today again we will take a look at the euro currency, because it seems that something is growing on the euro currency, something is coming, but there are still some options exist how this the scenarios that we will discuss today, how they could happen. So it's a bit some options exist here. So based on the daily chart, guys, what we could say, so mostly our Friday suggestion, our Friday trading plan has worked perfectly, because the support that market has met last week, so you can see this is daily, we're sold around the monthly pivot point, and the 1830 FIB support has pushed market high. So the stretch pattern that we have discussed worked nice. But now is question what to expect next. Usually, previously when the euro was on March and it's continuing trending action to the upside, such kind of levels and patterns were used for just upside continuation. But right now, as you can see, that's already, although the upside bounce has happened last week, but it really hasn't started some new upward action to the new top. This is the first moment. Second moment, on the fundamental picture of the current euro currency, we have some really important issues. So first of all, on next Sunday, this will be the elections in Germany, and that will be very important. That's why investors could start taking some profit and closing some positions just to be in cash before the important geopolitical event. This is first moment. Second moment, Commitment of Traders report tells that long speculative net long position right now is overloaded on the euro currency, so it stands near the all-time highs, and it means that euro currency just can't continue the same pace of the upward trend, because nobody stands on the opposite side, so nobody rests to buy, because everybody already hold long positions. That's why nobody stands on the other side who just could buy more and support this existing trend. Usually in such events, some meaningful retracement happens on any market. Finally, on the next week we will get the FOMC meeting, where as investors expect some hints should be given, and or maybe even clearly will be announced the balance sheet offloading of the Fed, because as you know, Fed, as a result of the quantitative easing program, it has very significant amount of the bonds that stands on the balance, and investors wait when the Fed will announce the starting of the sell-off and lighting of this balance sheet. So what does it mean? It means that as bonds will be issued to the market and will be sold on the market, this will dry the liquidity, because Fed will get the dollars out of the forex market, and that could support the United States dollar. That's the fundamental events that we have. Technically, guys, as you can see here, this is a result of the overloading of the positions, because take a look, market was trying mostly from the same level. So it's also near our results was actually the bullish grabber that we had here. Market is trying to continue move higher, but it has failed. It was just some minor wash and rinse of this previous top. This has been formed in August. The market has met the monthly pivot resistance one and turns down. That has created really significant bearish divergence on the daily chart. This divergence actually sooner or later, but it suggests the taking out of these lows and creating the new lows here. That could lead to appearing of some kind of the hand shoulders or something of that sort. Overall, guys, in general, the current situation in the euro currency is not really safe for trying to take the long position. If you intend to trade some bullish setups on the intraday charts, be ready to take the position somewhere around previous tops, because it's very low chances that market indeed would create the new tops here on the coming week as a result of the German election, maybe, but this will be already on the 2 weeks ahead. But on the coming week, hardly we will see that. So that's what we have on the daily. That's why, guys, on the intraday charts, we probably should watch for a chance to go short. So what we particularly will be watching for? On the 4-hour time frame chart, as you can see, Euro perfectly has completed our stop on Friday. As we said, that market could retest this trend line. That indeed has happened. As a result, we could get the two different ABCD patterns. First is the same that we have traded last week. It's minor ABCD, and it has, this was the 100% extension retracement, and 1618 stands approximately 1730, 1727, it's right here. But also as a result of this action, we could get the larger ABCD pattern that actually has the same target, 1730. What risks exist for that scenario? For that scenario, guys, it's only one risk, is that market could form large hand and shoulders pattern here. But as you can see, the top of the left shoulder stands significantly higher, and it means that market here could form another leg up to the 1250 area in the beginning of the week. That the opposite scenario, some alternative scenario to this ABCD pattern. So both of them will be bearish, but they will start bearish action from the different points. That's why the crucial moment here, the crucial area to watch for, is this top of this of the last week here is around 1975 area, and it's also this trend line. So if market will exceed it and move above this trend line, just don't be short. Wait when the market will continue to move higher. So that's just really could happen. That's why you should be extra careful to this moment. That's why just to not be caught in the wrong direction, we need to get the pattern on our back to take the short position. And here what we'll be watching for. On hourly chart, guys, as market has completed our ABCD patterns, you can see indeed 1618 extension has been met right at the 1994 resistance. Also, it was some large ABCD pattern later in the same target. Actually, we've got this guardeless triple to sell already, right? So we have dropped down, ABCD upward retracement. This is guardeless triple to sell. So if you haven't taken position short here, another pattern that we could watch for is another minor guardeless triple to sell that could be formed in the beginning of the next week. Why this pattern is possible? Because, as you can see, previous upward action was really significant. That was just the first leg down after this action has been completed. It means that market usually, after the first leg down, it forms two-leg retracement. And that's why appearing of the guardeless triple to sell pattern is highly probable. Appearing of the butterfly here is less probable because market already here has completed all extensions. So it has no uncompleted target above it. So for example, it's 1.618 target of this, our A, B, C bottom stands slightly higher. In this case here, we said yes, we will be watching for a butterfly because target has not been met yet, and probably market should reach it before action down will start. But that's a bit another story because 1618 target already has been met. That's why here we will be watching for a guardeless triple too. Why these patterns are attractive? Because they clearly show where to take the position and where is the invalidation point. Invalidation point will be above this top. And that is actually mostly the same top as we have on the 4-hour time frame chart. Slightly higher here. If market will exceed it, it simultaneously will mean that market probably is going to another scenario. And it will mean that our first scenario of the possible reversal, so this reversal point that market is preparing right now, will fail if market will exceed this top. Second attractive moment with all this stuff is that it's relatively small risk, guys, because if you suggest that you will take position somewhere around 90 and 65, the risk will stand 112 approximately. So it's around the 30 pips. So that is, in general, very good combination of the risk reward. And you will have your pattern on your back. Maybe even market will give you a chance to move your stop to the break even. Because, for example, it's also very significant probability that market will show some downward action before upward continuation, before this construction could fail. So that will let you move your stop to the break even and just watch what will happen. So when you have the pattern on your back, it's always simpler to do with the market when you do not have it. So that being said, although euro currency right now as a conclusion, so although euro currency it seems that is preparing something, and it seems that probably some kind of retracement is growing there. There are some options exist how it could start. Here's the first option that we have discussed, because right now market already has reached this area and already has created some patterns here. That's why we're talking about this scenario. If this scenario will fail in the beginning of the week and market will continue to move high and break this 120 area to the upside, forget about the entering short position and wait what will happen next, because next opportunity to create some reversal pattern will appear only around 120.50, 120.80 area, because that could become this large head and shoulders pattern on the 4-hour time frame chart. That's another scenario that could be formed closer to the end of the coming week. So that's two patterns, two scenarios that we'll be watching for in the next week.